get started. Okay, welcome in, you investors. And week two discussion was on Warren Buffett on the S&P 500. And some of you said, yes, Warren, you are right. The majority of Americans should put money into the S&P 500. But some of you brought up some really good points, I thought, that were counterpoints that said, well, maybe that's not for everybody. So, Dave, what do you think?
I think it's definitely a component of everyone's portfolio. I don't think it should be 100% of their allocation, but I definitely agree with the use of index funds and the easy diversification that it allows.
Now, Dave, you work in the industry, right?
Somewhat. I'm a partner in a tax practice, but I work in private client services, so focused on
Okay.
the wealthy individuals.
So you said it should be a part of it. How do you determine what part it should be and what should the other parts be?
I rely on my CFA friends for that piece, but just part of an overall investment policy that kind of gets worked out with their financial advisor.
Okay. One of my things is that I'm big on, and it's okay for y'all to disagree with me, by the way. That's fine, okay? Because as long as we're civil about it, we can disagree. But basically, what I did is invest in the S&P 500 for 30 years with the federal government and with my job. I was in the C fund, and they gladly matched 5%. Almost 5%. I guess it's more closer to 4, but they matched 100% on the first 3% and 50% on the next 2%. So that's what I did. And so it worked very well, even though I did that through the dot-com crash. I did that through the crash of 2008. I did it through the flash crash of 2010. I did it through the COVID crash of 2020. And so I've been through some hard times and some crashes through that. But basically, I was 100% S&P the whole time. So my outlook may be just a little jaded in that it worked for me. Doesn't necessarily mean it's going to work for everybody. But what I think people fail at is when they become the individual stock pickers, right? And now I'm not saying that you shouldn't pick individual stocks, but I'm saying if you do, that should be an account that is more of your little fun money account, right? By the way, does anybody know what the most recommended stock was by the class on the week two? Because I asked you all to choose a stock. Michelle, what stock did you choose?
I chose Amazon.
Michelle, you chose the one that the majority of the class chose was Amazon. I was a little shocked by that. I thought you guys would be a little more NVIDIA or Tesla or something like that, but you guys came in with Amazon, which I thought was good, which means you have watched your mothers probably have a box delivered to your house every single day like it does at my house. I go out in the mailbox right now and there's an Amazon package in there because my wife has an uncontrollable urge to buy from Amazon. Beth, are you down there? Because she's not in here to fuss at me now. But men, we are much more responsible when it comes to buying off of Amazon. So yeah, Amazon was the stock that you guys most chose to get into. All right, anyone else that disagrees with Warren Buffett? I would love to hear those comments in that discussion. Or you can just play devil's advocate, even if you don't believe going against the advice of Mr. Buffett. Tom, what do you think?
I don't disagree with him. I been doing this for 30 years, so I've been through the same downturns as you have. And after reading or hearing Warren Buffett and reading the Simple Path to Finance that talks about Vanguard Fund, it makes a lot of sense to avoid a lot of the fees that I've paid over the years for my different advisors to give me suggestions.
Right, because now I'm not saying that financial advisors are not a good financial advisor is worth their money. Okay, I believe that. But what we are into, y'all, is an industry that has tried to complicate that which is simple. And if you can effectively complicate that which is simple, you can separate people from their money. Let me say that again. We are in an industry where we try to, and I say we, the industry tries to complicate that which is usually simple. And if you can effectively complicate that which is simple, you can separate people from their money. Now, if you're a good financial advisor, that's fine. You're worth that money. And it makes the world of investment seem complicated. But the world of investment is not complicated. I go to the gym and I'm so happy because wherever I go, I'm spreading the word of, hey, guys, you're young. You need to be in the S&P 500. If you don't want to be a stock picker, you probably shouldn't be a stock picker, and just put your money in and let it grow. So at my gym in Carrollton, Georgia, we've got 3 of the employees there. They're all in their 20s. And every one of them has opened a Roth IRA with Vanguard, and they're putting their money into VOO, and they're putting 10% in every month. And so they're so excited now. They're like, one of them told me today, hey, I'm up $8. He was so excited. And I said, listen, you're going to be even more excited when the market tumbles and crashes, because those shares of VOO that you're buying now are going to be much less. And you're 25 years old. So you've got 40 years or so to your retirement. So you want the market to crash. You want the market to go down because you're buying more units. So what you should be, especially in your 20s, when you're starting off, even 18 or 19, is you should be an asset accumulator. You want to accumulate assets. Any other discussion on Buffett at all before we go on to something else? Does everybody believe me now that I said that this class is going to be easy? All you got to do is participate and do your stuff. I hope everybody's like, oh, I see. He's not tricking me. He's not making this a hard course, because I want you to participate and I want you to be a part of it and I want you to have fun. That's what I really want you to have, okay? Any other discussion on Mr. Buffett? All right. Week 2 reading, you started off in my book, The Graduate Millionaire. And has everybody done the reading? Let's see. I have not picked on, who have I not picked on? Have I picked on Kristen yet? Kristen, did you happen to read any of the first 3 chapters at all?
I did. I really liked the structure of it. Actually, for one of my last classes, I read a book called Smart Couples Finish Rich by David
good.
Bach.
Yeah.
And I really like the structure that each chapter is a step in the process. It makes it, easier to follow. And I like the language that makes it relatable. So it reminded me a lot of this book. So I liked it.
Okay, good. Anybody have any suggestions on anything to make it better? Any feedback? Remember, you're guinea pigs in this class. So you're my editors. If you see something that's wrong punctually, punctuation wise, or grammatically, if you'll let me know, point those out. I'll certainly give you bonus points for your feedback on anything like that. Or if you say it's not believable, there's actually a love story in the book. It's kind of cool. And this is based off of my very first class that I taught at the University of Alabama. So it kind of goes through everything that we talked about in that class and then some. And so there's about 1, 2, 3, 4, 5 of you in here today that are actually participating live. So it's kind of like the same thing, right? I'm taking this class through an investments and a financial class to get them in a better position. So I appreciate that so much. Anyone got any comments about the book, good or bad?
I did notice one grammatical error in it
Michelle, that is good. Where is it?
on page 16. I had it up. You are talking to Evan, and you say it does, Evan, and then there's an extra quotation mark between those 2 sentences because you continue talking to him.
Okay, so I'm on page 16, numbered page 16.
Yes.
All right, this is great. This is wonderful. Okay, Michelle, I want you to, this is Michelle, right?
Yes.
Michelle, I want you to send me an email and say, I told you, Tubby, that there was a mistake. And let's see. So I'm talking to Evan. So let's see where it's at. Evan asked, and it does, Evan. Oh, you're exactly right. Look, it's got a thing before budgeting. Look at that. Now, can you imagine how embarrassing that would have been to go to print without that? So I have made that change. Thank you. And how about structurally the book? The book's okay. I mean, it flowed okay. Everything good with you there?
Yes, I do. I like the pacing, and it's little bite-sized information that it's really easy to process. I've enjoyed it so far.
Okay, good. So let's talk about some of the takeaways from the chapters. And one of the things that I did, and one suggestion that one of the student made was that we should probably do an activity at the end of each chapter so that the people that are reading the chapters will be able to come up and do some things. But every chapter has a your money moves, right? So your money moves. And so chapter 1, there were 7 money moves that we came up with. And so if y'all can pull up the book, let's kind of talk through these and see if there's any discussion on these. Discover your personal financial mantra. Some of y'all are going to be S&P 500 investors solely. And I think that's a great idea if that's what you want to do and you don't want to pick stocks. Distill your dreams and objectives into a few motivating words to guide your money mindset. So, that's why having your theme song, what is your thing? Is it Eye of the Tiger from the movie Rocky? Hey, I am doing this thing. I am putting money aside. Get curious about finance. I'm sure all of you are curious about finance because you're in a CFP program here at the University of Alabama. So you're already there. Align your passions and your financial goals. Consider how achieving financial freedom can help you pursue your career dreams and life's purpose. I spoke to a young lady at Ramburn High School in Alabama that wanted to be a teacher, but she told me she couldn't be because she wouldn't have enough money. And so we took the average salary of a teacher and we showed her that by the time she got to retirement age, she would have over $2 million in retirement. So she actually changed and said, okay, I'm going to be a teacher if I can do that. And I said, yeah, you can do that. And showed her how to do that. And that was without her ever getting another raise or cost of living adjustment. So you can be what you want to be and still experience financial freedom. Tell your money story. Reflect on how your background and past financial experiences shape your current money habits and mindset. I am very tight. We don't spend a lot of money. And the reason is growing up, we didn't have a lot of money. So if you will show me what your parents did money-wise, that is a great indication of where you're going to be. If your parents struggled financially and lived paycheck to paycheck, there is a good chance, ladies and gentlemen, unless you do something differently, that you're going to be in that same exact boat. And you don't want to be in that boat. So what I did by writing The Graduate Millionaire is I thought, hey, let's get young people, your age people, and some of you are older, and that's fine. You can still take away lessons from the book, but let's get them into a much better place than where their parents were. Does anybody want to speak about how your parents' financial decisions have it affected you, or has it made you do things differently, or have you noticed that you're doing the same thing that they're doing? Michelle, what do you have to say on that?
My parents very much live paycheck to paycheck. My father changed jobs multiple times when I was growing up.
Yeah.
And so when me and my husband got married, we made a conscious decision. We're going to set aside this much money. We're going to live below our means. And so we might not, do all the fun stuff we want, but my parents are still working. They're 70 years old and they still have to have jobs because they have really no retirement. And I want to make sure that when we want to retire, that we can, and we, can enjoy our retirement. So it's made me much more aware of our finances and making sure that we're on track with what we want to do as we're, aging.
Good. So it's changed you for the better, right? It's had an influence on you to the positive that you go, I don't want to be like that. So, yes. You're like, hey, I don't want to necessarily be working still at 70. So you're doing things and taking steps. That's wonderful. Yeah. Thanks for sharing that, Michelle. All right. So know, and this number 5 is important. Know that financial transformation is possible. Your financial journey likely has twists and turns, but you can redirect your path at any point. Hopefully, some of you who are not on a good path will be on a good path after this course with our investments course. Surround yourself with support, seek financial mentors and communities to encourage you to achieve greater economic empowerment. I love the fact that at the gym now, these little 20-year-olds are now talking to the other employees and saying, hey, have you got a Roth IRA? Are you putting money aside for your financial future? And they're opening savings accounts, all kind of things that they're doing that they've not done before. And it's like, wow, we never knew this stuff. So hopefully some of you will have your eyes open to this as well. Celebrate the small wins. Financial wellness is a marathon, not a sprint. Celebrate milestones like paying off debts or saving your first $1,000. My personal trainer, she is almost at $3,000 in her IRA, and she is so excited. She's like, "Oh, I can't wait for 3,000." And I said, "Guess what? The day is going to come when that 3,000 is going to be 30,000, and the day is going to come when that 30,000 is 300,000." And she's like, "I can't imagine." I said, "Oh yeah, through the time value of money, this thing is going to grow exponentially." So she's excited about that. Get educated. Never stop learning, y'all. I still read financial books. I take classes. I develop money skills. And I'm doing everything to create opportunities for myself as well. I mean, you never go, "Oh, I've got it all figured out." And okay, hold on one second, y'all. Sorry, y'all. All right, chapter 2, the budget. Oh my gosh, y'all. Budgeting has potential. It is the foundation for control and empowerment. But I hate doing budgeting. Oh my gosh, doing a spreadsheet or keeping up with each individual thing. So that's why I came up with something that I thought was going to be a neat little thing in the book. And I hope that you guys do as well. Let me share my screen here for a second and see if we can see it. Budgeting, it should be very, very simple. And so what I did is came up with 4 buckets. There's 4 buckets that we can come up with. Let's see. Which one am I sharing now? Is screen 1. Share sound and share. Everybody on screen now? So I came up with 4 buckets, right? You should have a spending bucket, which is going to be your biggest bucket because that's what we do. We're humans. We spend money. There should be a savings bucket. There should be an investments bucket. And there should be a giving bucket. I got 4 buckets. Now, I made it very simple and I've got recommendations. Doesn't mean you got to go by my recommendations, but this is what I recommend for people. Spend 70% of your money. Ta-da! Save at least 10%. Now, if you could go 20%, go 20%. If your income is such that you can live on 60%, live on 60%. If you can live on 50% of your money and add to these, but at least 10% in savings, at least 10% in your investment bucket, and at least 10% in your giving bucket. Now, I often get backlash from the giving bucket. People say, "I'm not giving it away. It's hard enough." And I'm saying, okay, you're going to miss one of the biggest blessings of your life by being able to give. And you're able to give and still live on 70% of your income. Now, so what you need to do is say, hey, this is simple, right? If you get $1,000 check, it's so simple. You go 700 here, right? We go 100 here, 100 here, 100 here. That's your budget. So now you don't have to say, "Oh, well, I'm going to designate this much for dining out, and I'm going to do this much for groceries, and I'm going to do this much for gas." You need to make work whatever your 70% is. Now, most people can't do it, and we'll talk about this in a later chapter, but they can't do it because of debt, right? They've got too much debt. They've had to keep up with the Joneses. They got credit cards. They've got mortgages, which is okay. They've got car loans on the newest, greatest car out. and they've done all that. So they're unable to do their 70. But this is life-changing money here. 30% in savings, investments, and giving can really change your financial future, ladies and gentlemen. You need to know that. Anybody think that this budgeting technique is too simple, or you think you need something more elaborate? Charlotte, what do you think?
Sorry, I'm on my iPad and all the buttons are in weird places to unmute.
That's okay.
I think that this is super easy, and my husband and I have been working really hard on our budget. And to be honest, he has made our budget too difficult. There are too many categories, and I need it simple like this. So maybe I will show him this recording and be like, we need to move to more simple because I get overwhelmed with all the categories. I can do these 4.
Because that's why people don't budget. It's too complicated. So we need to make budgeting simple, and let's just have 4 categories: spending, savings, investments, and giving. Yeah. So show this to your husband and say, hey, maybe this is what we do. And then this is necessities that you got to come out of this. You got to come out with your rent, your mortgage, your food, and all of that. But try to live on 70% if you can. Now, if you can't, and let's say it's going to take 80% of your income to spend, then you're going to have to cut these down somewhere, somehow. But these are important categories, y'all: savings, investments, giving. Until you give, I can't explain to you the value of giving away, but it really is something to treasure. Any questions or any comments on savings, investments, giving? Anyone giving me backlash on giving? I'm not going to count against you on anything. Just let me know. Just looking for your feedback. Okay. So let's get back to it. Budgeting is for everyone, regardless of income. It gives you a roadmap. It aligns your expenses with what you value in life most. So you're budgeting to say yes. Allocate your resources to your goals, not just to restrict them. A budget should not be restrictive, but it should be, hey, man, this is awesome. I get to spend 70% of my income. Wow. It's not to restrict you and hold you back. It's to build flexibility. It's allowing you to adapt to life's changes. It helps you pivot when you need to pivot. And we're all going to have to pivot because all of a sudden you've got an unexpected child on the way. That's a pivot point, right? So personalize your approach, whether you're using envelopes like the Dave Ramsey system. You could do 4 envelopes, or using an app or a method that suits your style. I like Quicken. I use Quicken, and it's kind of cool to keep up with all my expenses. Like I could go and tell you, like, from 1999 through today how much I've spent at Walmart, and it's an unbelievable amount that I've spent at Walmart. I can tell you how much I've spent at Target. I can tell you how much I have spent eating lunch and dinner at the Greasy Spoon down the street, the Southern Lady. I keep track of all my expenses, and I do it using Quicken. So get you something, an app. Quicken has an app as well. You have to pay for it, but it works really, really good. So start small, stay consistent. Use the 70-30 budget. Cover your needs with a 70%, split 30% between goals, giving, and growth. And your goals are your investments, right? I mean, goals are your investments. What are those future goals way, way, way down the line? And it's okay to find some wiggle room. You can adjust your expenses and income to achieve your budgeting aims. Optimize surplus funds. Let's say my mama gives me $100 at Christmas time, right? She always gives me $100 every year. I'm like, Mama, inflation, girl, you ought to be bumping this up to 200. But Mama doesn't do that. She still gives me 100. But you get a little bonus money coming in. You get a sales bonus coming in from your job. Do the same thing with that. Put extra aside. Or you could say, hey, I wasn't expecting this at all, so I can put all of it into the saving, giving, and investments areas, right? I like doing this. I like basing your spending on the after-tax income. So in other words, if you get $1,000, but it's only $900 after taxes, I like basing your spending amount on the $900. So in other words, you would spend 70% of that, not your before tax income. But I love contributing to your goals, if possible, on your pre-tax income. So if you can do that, do that. Use the pre-tax income on those three life-changing buckets: giving, saving, and investments. Escape debt through budgeting, regain control, and rewrite your money narrative. Lord Jesus, yes. Seize the reins of your finances, direct resources intentionally to shape your destiny, feel financially empowered, knowledge, control, and purpose. Budgeting unlocks those things. And then we went to chapter 3, which was navigating the rapids of financial realties, that patience is critical. Manage debts responsibly while progressing towards your financial goals. Have entrepreneurial dreams. Who in here is an entrepreneur or wants to be an entrepreneur? Anybody?
I am. I have my own tax practice.
Kristen, how awesome is that?
I love it.
Yeah. So you probably don't have then a steady income. It may be kind of steady, but it may be cyclical as well, right? So budgeting is kind of a unique thing for you probably.
Absolutely. Luckily, I like Excel spreadsheets, so I use those a lot.
Oh, wonderful. How long have you been having your own accounting practice?
This is year 3.
Wonderful. Most businesses don't make it out of year 1, do they? So you're in year 3, so doing well.
Yes, thank you.
Yeah, so very good with that. And what kind of accounting do you do? All kinds of accounting or tax accounting? What do you do?
I do a lot of tax compliance. That's usually how I get people in the door with needing a tax return, of course. And then I offer planning and consultation services, which is where I feel like I'm able to provide a lot of value.
Wonderful. That's excellent. Very excellent. Anyone else in here entrepreneurial or wants to be an entrepreneur one day? I think it's great for people.
I run my own soccer camp business for many years, and also I had my own soccer club. So I've done a little bit of that.
Oh, that's great, Tom. Yeah. You know, I have a online business. Don't laugh, but I've got a YouTube channel. It's got over 500 videos on there on teaching people how to trade stocks and options and things of that nature. And then it feeds people into a Discord community. I've got like 942 people in a Discord, all paying me between $19 and $29 a month in a Discord channel that's devoted to trading. So, you know, entrepreneurial things are very, very good. Very, very good. So values-driven investing, consider aligning your investments with your values through socially responsible investing and charitable giving. You know, like one of the people said, one company that they would, how do you pronounce it? The Altria or whatever, the ones that does the cigarettes and all that. They said, I personally wouldn't invest in it, but you know, it's probably one that would be good because people are not giving up their cigarettes. And I thought, well, that's one way to think about it. But you can actually invest according to your values. Now, do I look at the S&P 500 and go, oh, I don't believe in what this company? No, I don't do that. I just say, hey, look, I'm in the S&P 500. I'm doing. I'm not looking at individual companies go, oh, I don't believe in that company, so or what they're doing, and invest that way. But you're certainly welcome to do that. Stability and uncertainty. For professions with fluctuating incomes, create financial stability through budgeting and emergency funds. Keep an open mind, ladies and gentlemen. Yes, the journey of personal finance, even if you have initial doubts, is something worth pursuing. The knowledge that you gain can empower you. Address concerns head on. Don't let doubts or questions prevent your financial progress. Voice concerns openly so that they can be addressed. If that is you working with a financial planner, make sure that, or you're going to be working with people before, right? And you want to encourage those people to voice their concerns. So if you go in and tell a client, hey, I think you need to be 100% in the S&P 500, and they balk at that, be willing to listen to their concerns. They may have legitimate concerns. Learn from the past because the past repeats itself. Abby, will you get that dog out of here? It keeps yapping and making my. Well, where's it at?
In there.
Can y'all hear that dog yapping? Can y'all hear the dog yapping? Anybody? Maybe not.
I don't know.
Okay. Calculate your net worth. You know, keep a picture of where you are and see how you're doing with that. Embrace the long game. Now, some of us don't have a ton of a long game. You know, I'm 53. Maybe I've got a good 30 or 40 years left. Hopefully we can get that out. And customize your approach. There is no, and some of you brought this up when Warren Buffett said for the majority of Americans, S&P 500 is where they'll be. And remember, there's no one size fits all path to financial freedom. You need to adapt strategies and tools to match your individual goals and lifestyle. Okay, any questions on the first 3 chapters? So the next thing is you got to do chapter 4, chapter 5, which chapter 4 will go into responsible spending. Chapter 5 is the power of saving. And one of my favorite chapters, y'all, is the growth, the magic of compound interest, growing wealth over time. That's a great chapter and something that we'll spend some time using a financial website next week to do some interesting calculations, which should be really, really fun. All right, any questions on that? Are you reading it all? Okay, your week 3 assignment, correct me if I'm wrong, your week 3 assignment is to, I think I've given you assignment to sell a put. Is that right? Someone double check me on there. It's in there somewhere.
Yeah.
So okay, good. So y'all need to know how to sell a put. So let's show you how to do that. Now, first of all, what is a put? Anybody know what a put is? Okay, that's good. If you don't know what a put is, that's fine because they don't teach this in college a lot. But a put gives you the option, but not the obligation to sell a stock at a particular price, which is called the strike price. Okay? A put, if you buy put, it gives you the option, but not the obligation to sell a stock at a strike price, at a particular price. Okay? At some point in the future, and these always have expiration dates. Options expire. Every one of them expire. Okay? Let's talk about a call. A call is an option, and just change it up to buy a stock at a particular price at a particular point in the future. Okay, so you got a call as an option to buy, a put is an option to sell. Now, that's if you buy a put or you buy a call. When you sell a call, that's an entirely different thing, and you sell a put. Let's just talk about selling a put now. When I sell a put, I have the obligation, right, to do something. And what happens is I have the obligation to buy the stock at a particular price at a particular point in the future, a certain time in the future, okay, at the strike price. So how that works is, let's bring up the little thing here, and so you all can get it. We're all going to walk you through this. You're going to be fine, right? So let's say that here is a stock and it's trading for 100. Okay. All right. And let's say that I sell the 95 put. Now you're wondering why I'm putting it on the right side and I'm putting it above this. You'll see when we show you the option chain and what the option chain does. So let's say that I receive $1 for doing this. Let's say that put option, I sell it for $1. Well, a put option represents 100 shares of stock. So if I sell a put for $1, I actually receive $100. 1 times 100. Okay, so I'll get $100 for selling that 95 put. If the price of this, and let's say I'm doing an option that has 45 days to expiration, DTE, days to expiration. If the price of the stock is above 95 at the end of 45 days, I get to keep the $100. Hooray! It is mine, baby. That is my money. But if the price goes down to 95, then I am forced to buy the stock at 95. Now that's kind of cool though, right? Because now my cost basis, I am put the stock. That's what they call it. I'm put the stock. I am forced to own the stock. Now, you don't have to issue a buy order either. You will wake up the next day, as long as the price is 95 or below, you will be put the stock. You will have 100 shares of whatever the stock is in your account, but you get to keep the $100. Well, what if the price of the stock keeps going down? Well, you've got a problem, right? Because then you're experiencing losses from your 95. But as long as it stays above 95, you get to keep the $100, and you are not, and then you can rinse and repeat, right? You can do the same thing again. So what I encourage people to do, and what you should encourage people to do, is let's say someone comes to you and says, man, I am an Amazon fool. I want me some Amazon, which is what the stock that most of you chose. And let's say that they're saying, I want to buy 100 shares of Amazon. And you say, well, no, let's don't do that today. And they're going to say, but I believe in Amazon. Well, let's go to the little trade tab here. So here's your platform, right? You've got your platform. You've got monitor, trade, analyze, scan, watch smart. Let's go to the trade tab. This is what you'll do on your Thinkorswim. And you'll type in the symbol, which is Amazon. So let's type in Amazon, AMZN. All right. So it brings up a couple of things. Amazon is currently trading at 157.61. Right? That's where it's at today. It is up $1.57 from yesterday, and it's actually up 1.01% from yesterday. On the day, it's up 1.03%. That's kind of good. Now, there is a bid and an ask. Okay, what is a bid and an ask? Well, if you're buying, you buy on the one that is least advantageous to you. So they're going to charge you on the ask, 157.64. The bid is where you could sell it at, which is going to be 157.62. So you sell on the bid and buy on the ask if you were buying shares. But what I would say to them is, Mr. Client, it is trading at 157 right now. I agree. But if we were to go out, let's say, and this is the options chain. Everybody, you hear me say options chain, this is the options chain. And these list the days to expiration. This is an option chain that has 2 days to expiration. This one has 9, 11, 23, 30, 37, 51 days until the last trading day. So let's say we want to go out in time and we go to the 51 days out. Now, puts are on the right side. So puts are over here. All of these are puts. Oh, where's my little pen, Bobby? Puts over here. Calls over here. These are calls. These are puts. Okay. So what's this? You sit there and say, what is the probability of a strike? This is the strike price, right? If they love the price at 157, they're going to love the price at 135, correct? So what you could do is this. You can actually choose the probability of being in the money over here so example, the 135 strike price, which is 22 points below the current price of the stock. It only has a 12.59% probability of that being in the money. What does in the money mean? In the money means that the price of the stock, 157, would be at or below 135. There's only a 12.59% probability of that happening. Now, what we refer to this as is a lot of people will refer to this as delta. So if I said to tell you to sell the 10 delta put, well, delta and probability of being in the money are approximations of each other. So this is I could say this is a 12 delta. This is a 0.10 delta, which means this is a 10 delta. And it's actually a negative 10 delta, but we don't use the negative in common in the industry. We just say it's a 10 delta or a 12 delta. So on your little platform, ladies and gentlemen, when you go here, you're not going to see delta and probability being in the money and bid ask. You got to go in and change this. And you're going to go to option theoreticals in Greek. and you're going to choose delta. You're not seeing that. It's off my screen now, but I can go up there and choose delta. And then on the other one, you're going to choose option theoreticals in Greek, and you're going to choose probability of being in the money. And when I say I want you to sell a 12 delta, this is what I'm talking about. 12% probability of being in the money. Or you could go over here and say, what's the 12 delta? Well, I can sell the 15 delta or the 10 delta. These are approximations of each other. Now, watch how cool this is. There is a bid and an ask. We sell on the bid, the option. See, it says sell right there. You see there's a little sell, and we buy on the ask. So if I told you to sell the 12 delta, you would say, what probability of being in the money is 12? And I said, sell the 12 delta. You would left click on the 135. Okay, on the bid, because that's where it sells. See, it changes to buy there. You don't buy there, you sell. And you click enter. Now, some of you will not have it set up to where it's at one lot, but I just want you to do one lot at this point. Yours will probably say 100. And I just want you to change this to -1 and make sure this is sale. You're selling the 135 at $1.02. So remember, now you can up it to the midpoint. You can go up and say, oh man, I'd like to get that mid price. If you don't get filled, you can go down to the 102. Okay, everybody with me? Make it less advantageous for you in order to get filled. See, now the NAT and the mid price are the same, so I'd probably get filled at 103. You're then going to hit confirm and send, and it will bring up this. Here is your homework assignment. You need to say what the break-even price is. So you'll break even if this thing, you won't lose money or make money as long as the price goes down to 133.97, even though it's less than your strike price. So that's the break-even price. Your maximum profit is the premium. That's what we call it, received from selling the option. Remember, we sold this for $1.03. So times 100, you're going to get $103. So your max profit is here. Identify that. Your max loss, ladies and gentlemen, this is why a lot of people say options are scary. Holy crap. I can only make $103. But I can lose $13,000. Not for me. Your maximum loss occurs when? When the price of Amazon goes to 0. Okay? That's the only way you can lose the maximum, if the price of this goes to 0. So the credit that you'll actually get will be the $103 less 50 cents commission that they're charging. So I will actually get to put into my account $102.50. Now, because this is an IRA and there's no margin in this account, they're going to charge me. Let's say this is a $100,000 account roughly. Okay, this is a real IRA account. They're going to charge me $13,000 of buying power to make this trade. Well, I only have $33,000 of buying power. So this is the collateral that they charge me. So they will say, hey, Bobby, you got a $100,000 account. We're going to hold aside $13,000 just in case this stock goes to 0. Now, that's because it's in an IRA account. Yours should be just regular margin account. So the margin or the collateral that they're going to make you put up to do this trade is going to be much less. Okay. And then it'll tell me how much buying power that I have left over for stock and how much buying power I have left over for this. And then you're going to hit the send button. And it should fill. You're going to wait for something to say it fills. It'll click over here and say filled. Or if it doesn't fill, it will be in your working orders. And you find that under this, under the, excuse me, go out. Under the monitor tab, working orders. You see, I have 3 working orders here that are working. right, that I'm trying to route. And these are GTC orders, which means good to cancel. Yours will be day orders. If you don't get filled, you're going to right click on your order and you're going to hit cancel and replace. And to get filled, you're going to reduce this price. Now, I'm buying an option, so I would have to increase the price, but you're going to decrease the price. You're going to make it less advantageous for yourself. If you don't get filled at $1.03, you're going to have to go down to $1.02. Okay, just hit the down button and then hit confirm and send again until it fills. If it doesn't fill then, go back to your monitor tab, same thing, right click, cancel replace, and make it less advantageous. You're going to collect less money. Who else had a different stock? Who had a different stock?
I had IBM.
IBM, okay. Who was that? Tom? Okay, Tom. So let's go to IBM. So we'll trade IBM. Okay, so it's a $173 stock. I want you to go nearest to 45 days. So it'd be either the 37 or 51. You're going to go down. And if I said 10 or 12 delta, I forget what the assignment said. But let's say I said the 10 or 12, you could go to the 16. You're going to left click on the bid. You're going to change this to -1. Yours may be -100. You're going to go over here and you're going to say, I'd love to get $1.19, but it will fill at $1.15. That's probably where it's going to be. So you could go up to $1.19 and try to get it. Confirm and send. If it doesn't fill, go over here to the monitor tab, cancel, replace your order. You would right click on this and cancel, replace. Okay, so go back to the trade tab. You hit the confirm and send. Here we go. In this, your break-even price is $1.58 because you sold the 160. So you got a 158 break-even. The maximum profit is the amount of money that you've received. The max loss is if it goes to zero. The credit received is $118.50. And they're going to charge me, because it's an IRA account, the full amount of the max loss as collateral to put up the trade. Questions on that, Tom?
No, sir. That looks good.
Okay. Now, let's see what it looks like. I'm going to go to a different trading platform to watch this because this is kind of cool. I love the way that it looks over here. So let's go to Amazon. And this is in a platform called Tasty Trade. The only reason you're not using Tasty Trade is because you don't have they don't have paper trading, right? But I just want you to see what it looks like. So over here, we take trade, Amazon. We go closest to 45 days, which would be 51 days. We'll left click here. And let's say I said the 10 delta, right? 10 or 11% probability of being in the money. So we would left click on the 135.
Excuse me, Dad. Can I have a
Okay, sorry about that. So what we do is, what's this? I want you to see what it looks like. This trade, ladies and gentlemen, has the inverse of the delta. Is a 10% or 11% probability of being in the money, which you don't want necessarily unless you want to buy the stock. But this trade has a 90% probability of me getting to make at least a penny on the trade. It has a 95% probability of success of me getting at least 50%. So if I'm getting $1.03, it's going to mean I'm going to make $51. I've got a 95% chance of making the $51. It shows you your max profit and your max loss. And in this account, check it out. This is not an IRA account. So this one allows me to, they're only charging me $1,300 in collateral. Now watch what it looks like, y'all. This is so good. I want you to see this. This is what this looks like. So Let me put off this. Let me go over here. Let me just make sure we just got the yep, analysis curve. So you see here, you kind of see that here's where my strike price is. As long as the price of the stock, and this is where the stock currently is trading, is above the 135, and actually there's a break even down here. Remember, it's like 134 something. As long as it stays above that, I get to keep that $103. I start having losses down here when it goes below. So you can actually see that you have a loss if it goes below your strike price. So if you're trying to buy 100 shares of stock, why not make $100? Now, the risk that you have is opportunity cost, right? If the stock keeps going up, you're not going to make any more. You're just going to make the $103 that you sold it on. But this is a really, really cool way that you can see, the profit and the loss on a particular trade. Isn't that cool? All right, questions? Questions? Tom, Kristen, Dave, Michelle, any questions at all? That should give you enough to be able to sell the put for this week's assignment. All right. Hope you guys have a wonderful week. I'm going to stop the recording.